All right. Yes, hello and welcome everyone to another exciting live class here on Bull's Corner. I'm your host, one and only Big Bull, and today we're gonna diving into one of the most powerful tools in the world of technical analysis, which is Fibonacci retracements and extensions. So, guys, today I'm gonna talk about how you can take your entries, how you can mark perfect Fib extensions, and then how you can use those extensions to have your targets and all that, sort of basic to advanced level of stuff. So without wasting any time, let's get right into it. So let's get not fibs, let's get spy first and see what fibs really are. Guys, in my opinion, guys, fibs retracements gives you a really good entries on your plays, especially when you're shouting or when you're going long, when you are combining it with other tools that we discussed, like support and resistance, or it could be magnets, or it could be candlestick patterns. If you combine them all, and then you also combine it with this powerful tool, which is Fibonacci retracements. Then I think you can definitely have a sniper entries on your plate, and then I use it every single day, all the time. And then especially if you're using waves, and they go hand in hand, and can definitely level up your game if you using it in your day-to-day trading strategies. First we'll talk about some of the key fibs that I use. There are three main ones that I use every single day. I'll tell you the importance of every single one and stuff. So the first one that is a basic one. 38.2, 50, and 61.8. So these are three main ones that I like to use. And then I'll also put one another here is 78.6. So these are the four main ones I use. The importance, I give them as very low importance to 38.2, and low importance to 78.60. And but they're still important, and I'll show you a lot of examples on all of these when price bounce off these levels. But this is the main one. These two, 50 and 60, 1.8 are the probably main one. This is where I take 90% of my trades. And whenever I have these fibs in confluence with my supply and demand, with support and resistance, or any other strategy I'm using, when I have confluence in this golden pocket, then I would definitely go ahead, take the trade in this zone with the stop loss, or prior swing highs or prior swing lows, or according to my risk. So these are the four main ones that I use. And then I do think all these banks and the algos they do trade just based off Fibonacci extensions and retracements, because there's no other way algos can trade. They're not looking for this support, this base breakout or not. They just, I think, completely looking at fibs to trade on their own. And then that's why fibs can really helpful in our day trading and swing trading, if you know how to draw it properly, if you know where to take your entries and exits. So how would I draw it? The first simple question, and then many people don't even know how to draw fibs. So simple answer would be, so let's say if the class you remember from for the higher highs and higher lows class, where I taught the structure changes, and all you have to do is mark the prior highs and the prior lows, right? So, and then all you have to do is from the bottom to the top. That means if you are going from bottom to the top, that means you're gonna buy the dip on any if you are putting from the bottom to the top. If you are going from top to bottom, let's say if you're going from top to bottom, then it's a short side, then you're looking to go short on this one. So let's take a example here. So let's say I want to short the this pullback here into the golden zone or any fib zone which is working for me, and I would take the highs, which is this is a prior highs, and now price starts to bounce off this one. It started bouncing. I would draw my fibs from highs to lows, and then see where the price is at 38, 50, and 60. Then I'll go in a smaller time frame to look for a rejection of these zones, and then we'll take the trade accordingly. So in this case, price rejected 76, and then went lower. So that's how I would draw my zones from top to bottom. And then in this current trend here, which is a prior swing highs and prior swing lows, I would take this and then go to downside. As you can see, price is constantly rejecting this 50 retracement here. I know many people are shouting this 50% retracement because that is the golden pocket. Price is in a golden pocket, and then you tend to reverse in this zone, and then many people are going to be short in this zone because those who miss this downside, so they'll try to short it as long as price stays below this 480 level. And then for going forward, I will talk about how you can take entries and exit, and where you can put a stop loss if your stop loss is pretty wide, and how do I use it every single day, right? And then same thing goes for the upside. Let's say you want to trade the upside, and then you would take the bottom to the upside, and then you will see where the price is bouncing off. As you can see, price is kind of bouncing off this 50% retracement too. And then if we take from the half, so price is kind of in this chop here. That's why we're chopping so much, because prices bulls and bears are fighting in this golden ratio. And then if price is staying below this level, that means bears gonna win. And then if price goes below this 61 ratio, that means the bears gonna win, and then we will continue seeing the downside. So that's why we're chopping so much, because price are stuck in this chop zone of those half up and half down. Looking at some of these examples here, like here, we have this lows here, coming to the downside, and then most people would have like this, and then look at the rejection here, right in the golden zone, rejection. And then when you're drawing the how important including, guys, it's very important, you have to include the wicks, the tops, the absolute tops and the absolute bottoms. You don't in supply and demand, you can exclude wicks, but when you are drawing any fibs, if the extensions or retracement, you have to include the wicks. The point is to get the absolute tops and the bottoms. And just like here, and instant rejection of this golden zone, and then we have this shooting star in play, then you would know that there is shooting star in the golden zone. There are high chances that we can reject off this zone with the stop loss at this prior shooting star candle highs, or this 61 retracement, just to give you an extra buffer on your play. And all these bounces that come in the 15-minute or 30-minute time frame we go, and then we can see even more examples like today. The reason that I am short, I think market is going to go down, because market did retrace into the golden zone, and then looks like it's also forming this bear flag too. And then high chances we can see ABC tomorrow for a new lows or back to this demand zone here. But we'll see what happens. And then how would you take an entry using those fib retracements, right? You just anybody can draw this, and then but just you cannot always take entries here, but you have to have to know if this is a good entry point or not. And then how do you know if this is a good entry point? You can combine with the supply and demand and support and resistance, if there's any prior support or resistance out there. So a good example would be let me see if I can find something. Like this one, right? So now if we from top to bottom, pull on my fibs, and then right here I saw a supply right here in 50-minute. I saw the supply zone right here, and then in this supply zone, now I know this is a valid supply zone. This is the untested fresh supply zone. And then if price comes back to this zone, there are high chances if price is going to reject, then I'm going to draw my fibs and see if where the golden zone is. So if the golden zone is in the supply zone, then that means they are adding an extra confluence to my trade, that there are high chances price can reject of this golden zone, and then I can stay short as long as price is staying below my golden zone, which is 61.8 to 429.62 on in this example. Again, guys, if you are just solely want to trade based off extension, you definitely can. Again, it's all about, guys, trading is all about having the calculated risk on your trades you're trading. Some people, they don't even look at this supply and demand or all that stuff. All they do is, as long as you identifying properly the prior swing highs and prior swing lows, and then you pull them out. And then think about this, if it's all about having probabilities on your side, and then according to the way I'm trading is the Fibs from past almost 2 to 3 years, is every single time price is coming into this zone, instead of instantly going short blindly, look for a rejection candle maybe, or look for a structure change in a smaller time frame, and then go ahead, take the trade in that golden zone. As long as price is staying below this golden zone, then you're good. Every single time price is going in the zone, just go ahead and try to take the trade. And then if you're taking the first trade, it's not working out, you're taking the second, it's not working out. But guys, I can tell with experience, and every single time, if you're gonna take more and more trades in the golden zone, first of all, you will learn a lot how to take the trades in Fibs. Second, the probability is definitely gonna be higher, because if the algos are trading it, and then you're drawing it from prior highs to prior lows, and then that means instead of buying at the lows, when let's say price is breaking prior support, you're not paying the highest premiums on your option contracts. You are adding on the pullback, either shorts or either it's long. You're only adding on the pullback, so which also reduces your risk of getting an L on the trade. That means, guys, pullback trades are the ones having a good risk to reward every single time. Instead of if you are trading break and retest, that means you are probably paying the highest premium on the day, and either the upside or downside. But when you're trading Fibs and then you wait for the pullback to happen, that means you are buying the pullback or you're selling the pullback, which obviously increases your chances to win that particular trade. So even if you don't know how to draw supply and demand or sell, just draw the Fibs, and then wait for the price to retrace into the golden zone, and then go ahead and then try taking the trade. Or let's say you are drawing the Fibs on 4 hours or 1 hour, and then go on a smaller time frame like 5 minutes, wait for a price to go into that, and then wait for something like this. Let's say I'm drawing the Fibs, and then price is going higher in a 5-minute time frame, and then I know price in golden zone. I would wait for a 5-minute rejection with a 5-minute trend change, structure change on 5 minutes. Then I would go ahead, take the trade with a stop loss at the prior that rejection candle, or if your risk allows at 61.8, which is a pretty solid golden ratio here, right? Let's look at some of the examples if I can find. Like today, price probably bounced off golden ratio right here, exactly right here. Price gapped up yesterday, and then made a high, and then from the lows to this prior highs, look at this prior lows to this highs here, and then when price bounced and then came back, not here, yes, so this is where price opened up. This is where price opened up right at the golden zone. That's why I did not go short this morning, because I knew price was holding this 61.8 golden ratio, and then only I was gonna go short if this 50-minute candle was closing below this golden ratio. Only then I was gonna go for this small gap fill. This is probably my next target here. This is the next demand. I don't see anything else. But price did bounce off right off this 61.8 golden ratio here, and then that's why it's a big gap. And then many went tried shorting this pop, but guess what happened? Price just popped up, and then went to the downside. And then where this price bounced is obviously this a prior swing lows, and then this a new swing highs. I'm taking my Fibs from top to bottom. Where's the price bounced exactly at 61. 0.8% ratio. I'm not making this up, doing it live in front of you guys. You see how important this ratio is. Again, if you're not trading it with Fibs or anything, you can just definitely trade it alone. Its own, this is where price bounce. I can show you, this prior examples too, where price probably bounced and rejected off this level, a lot of times. This one I showed you already. This was the one. And right here, from top to bottom, let's look at 50, 78. These are three main ones. So the first time price came to this 50 zone here, the first time price came to this 50, price rejected, and then did give some of the downside right here, and made some lows, nice intraday trades. But next time price went to this 60, it resisted, but there was no trend change on a smaller time frame, so I would just stay away. And it went to 78, closed it, but there's no reason to also trade here because price just gapped down the next day. But price gapped down, and then what happened, just a gapping down, or if you go on ES at the same time, you would probably find it much easier to trade because there's no gaps on it. I think it's this one right here, going from bottom to top, right here, rejection in this zone, and we got this trend break right in a smaller time frame, a clear head and shoulder patterns too. And I think we did talk about head and shoulder, the chart patterns too. I think I still have to upload that video. I just got to remind. And this head and shoulder pattern breakdown, and then this retracement. This was the prior highs, and also a good risk level to take the trade. Breakdown, smaller time frame, structure change, 15-minute, and this is where I would take the trade on the structure break right here, and then easy downside on this one. And right here, if you look at from this highs to this lows, another rejection in this 3 Fibs, or not even 3 Fibs, just a golden ratio alone, this 61. Again, guys, every single time it's not going to be perfect. Obviously it's going to be, you have to adjust your levels. It's not going to be exactly 61.8 or 50, but it's obviously going to be a 0.2 or 3, plus point minus 3, in that range. But as long as you are drawing your Fibs nice from top to bottom, then obviously there are high chances that you will find successful trades using those Fib extensions. Fib retracements. Have any questions on Fib retracement so far? Again, I know, guys, most people do trade Fibs, something like as soon as price comes to this 50, they try to take the trade right away, and then they put the stop loss at this next Fib, and then if price reach the 61, they put the stop loss there, or they take the trade at 61, and if the price is going to this 78, that means they taking the stop there, which is also can be good strategy, but in my opinion, if the price in this zone here or in this zone, or either you're trading this 50 to 60 zone or you're trading 61 to 78 zone, then I would say your stop loss should be at least 100 here. If you're trading this 61 to 78 zone, then my stop loss would definitely be at 100. The reason is because this is where our retracement started, right, from prior swing highs to the prior swing lows, and then if I'm buying the pullback as price is going up, and then if I'm buying the pullback in this zone here at 61 and 78, and then there is not much of a risk. That means if price is breaking the prior lows, that means the trend is already changed, and there's and then I would look for a different trade on that next pullback to go short, right? But if price is just keep going up, coming back to this zone, then I would just buy it in this zone with a stop loss at 100%. But if I'm buying in this 50 to 60 zone, 50 to 60 zone, then I would I would definitely not use this 100% as my stop loss, because that's gonna be and adding in another higher risk to my trade. So at this point, as soon as the structure changes, what I mean by that is, let's say price is going higher and then it's coming back like this, let's say lower highs, lower lows into that 50 to 60 zone, and then price coming into the zone, I take the trade and then go into smaller time frame structure changes, and then or there's a confirmation like a hammer candlestick, or if we're trading, we're talking about upside, or there's a bull flag, or there's a bull flag breakout into the golden zone, or it could be a demand into it's a demand confluence, anything, as long as you have a good confluence. Or even if you have no confluence, then I would just wait for the structure change in the golden zone, which would be, let's say this is a smaller time frame, lower highs, lower forming, and something like this forming, and then I would wait for this prior highs to break. That means the trend is changed, and now I can go long, with the stop loss at this prior lows here. It could be above the golden ratio, it could be below the golden ratio right here. As long as these lows are protected, I'm gonna go ahead take the trade, expecting that price can go higher from this golden ratio to the upside. So let's say if my bias is the price have to go upside, and then let's say price is making new lows here instead, and let's say it stopped out and then it goes to the 78%, then again I'm not because as long as price is holding this prior lows, that means there are high chances that we can see a reversal. It does not matter, guys, if price is breaking below this golden ratio, the price is bearish, or the price is bullish. As long as price is staying above this prior lows, where you start your Fibs, which is 100%. In this example, it's a long, and it does not matter, guys, if price is breaking below the 78, that means price is bearish. As long as price is holding above this prior high, that means price is bullish. It can bounce off anywhere from here. All you have to do is go on a smaller time frame, look for a structure change, and then go ahead and place the trade using that information you have on that current time frame. Right. So that's how I would trade Fib retracements. Using all the tools that I taught you guys in the last week, right? And then I also told you guys, even if you don't want to use any confluence, that's how you can definitely go ahead and trade it. Again, you're not gonna be able to master it the first day or second day, but keep back testing it every single day, every single stock that you guys watching, try to draw Fibs on intraday time frame from highs to lows, and then work your way up, and then you can even use it on a single candle instead of using this full trend. You can use it on a single candle, and then even take more sniper entries using Fibs, because that's what I do. I use it every single day, and that's how I snipe the entries and exits using those Fib retracement tool on SPY, because it works the best. It works the best on ETFs especially. Hope you guys understood. This that's very basic, guys. Nothing hard to understand about this. But all you have to do is just practice, just to get more and more advanced in this one. Not gonna lie, guys, I took a lot of L's, using this at first. But once I get a hang of it, then it just be my second nature. That as soon as I know price in a golden ratio, and then I look for a confirmation, it's good that I'm gonna beat like this morning, like here. And if you look at ES, just give you a quick example of this morning, if how kind of you can trade it. This prior lows, prior highs, right here. So in 15 minute, in 5 minutes, this is a 5 minute time frame. And then we're marking this Fibs, price, price is at 61, it started to bounce. I'm not going to go ahead, take the trade, or will try to catch the falling knife here. Instead, I would wait for a structure change, and this is where the structure changed. You see, price was coming down, lower highs, lower lows right here, lower highs. And then as soon as price broke above this prior highs, I was, first thing first, I was not interested in shorts. because the structure changed and it bounced off. It's bounced off this retracement level, and price was in the gap in SPY. And what happened after the highs, price just kept pushing up. It just made these new highs, and then it rejected at right here. And then why did it reject it here? Let's find out. If we can pull out the Fibs on SPY from this prior highs, because this was the prior highs on SPY and this was the lows, right? And then we take out the Fibs from top to bottom, and it rejected exactly at 50%. It went up to 50%, and obviously when you're trading higher time frame, you're gonna have a lot of this big gap. So it's good to have a buffer. And then price went to 50% retracement and then made a new high, instantly rejected. That was your sign. If you go into smaller time frame in 5 minutes, trend changed, and then trend change, that was sign to go short on this one. Price was constantly making higher highs, higher lows right here, and then the moment price broke below this prior lows here, the trend changed. There was no reason to go long anymore on this pullback, because the trend changed, and then price jumped to the downside, and then where price bounced exactly from the golden ratio again, right? And now the 5-minute trend changed. It's making higher highs and higher lows, but we'll see what happens overnight, and then in the tomorrow session with this one. So guys, there was Fib retracement. I showed you guys all the examples how you can trade it, how you can mark your entries, exits, and take profit levels and everything. So now let's move on to the Fib extensions. I know many people do not use it, or they do not know how to mark those levels too, or how to use Fib extensions in their day trading. Fib extensions, guys, the mainly I use Fib extensions is to have my targets. Basically, let's say you don't know where the price is gonna go, because price is all controlled by algos, and then they use Fib extensions to use as their exits too. You cannot use extensions as your entries. It's only for your exits or your take profit levels. And then how do you use it? You need 3 points for extension. For retracement you need 2 points. For extensions you need 3 points, which would be the prior swing. Let's say if I'm trading the long side, right? In this scenario, I would use the prior swing lows, and then the prior swing highs, and the current swing lows. Right, so these 3 points I would use in my Fib extension to use to have my targets for the long side. If I took an entry on that retracement, which is something like this in a golden zone, then I don't know where the price is gonna go. Then I'm gonna use these 3 points: prior swing highs, prior swing lows, and the current swing lows on the if I'm trading long side to have my targets for the upside. So now let's say if I am using this one, price bounced off this low is 61.8. Now let's mark 61.8 as a bottom swing lows, and Fib extension is gonna be the same one. This prior swing lows, prior swing highs, this one, and this current swing lows where the price is bouncing or bounced, or you took a trade on that structure break on 5 minutes, and then I'm pulling it lows here. So the ideal target would be, again, golden ratios, right? Ideal target will be golden ratios. These 3 will be the main ones. 50, 60, and 78 will be the main ones. Now look what happened here is, and I'm just gonna mark where is 100, where is 0. So this is where we started, right here, not this one. Let me mark it again, right here. So these are 3 points we selected: the prior lows, highs, and this current swing lows. And then look, guys, if anyone who bought it here on this 61.8, trend changed, where they would have sold. They sold in the golden ratio right here, price bounced higher, went on this golden ratio here, and then rejected exactly the 76.8, and then went lower. Rejected this, and then you have your confirmation that you price in the fib extensions golden ratio. This is not the point where I would go along because it's already at the day's highs. I would just say take profit levels for the big money. I would wait for the price to retrace back to the golden ratio again to go long, and then I would use my extensions again to determine my targets, which is in this case, let's say this one. Price bounced off this 68 and 78 golden ratio, and then trend change, you take the trade. Price is making these lower highs, trend changed, prior highs broke or this highs broke, trend change, it's the price in a golden ratio, bouncing higher or retracement. Now what I'm going to do is I'm going to pull out my extensions from this prior lows here, prior highs, this current lows here, and then my target. My first target is going to be this golden ratio. Look, price went to this golden ratio, rejected a bit right here, exactly 61, rejected, consolidated some time, and then went higher, right? If this is a wave 3 again, if you are using fibs with the waves, that means you are definitely opening up a different level of advanced technical analysis, which is I would say not many gonna understand in the first place. If you're not understanding the fibs, is wave 3 always if I'm using fib extensions, then wave 3 always goes 161% of this first wave, which is right here, right? It goes 161. This is complicated. So as a beginner, all you need to do, if you're taking profits, if you're using extension, all I would say is take profits, take out most of your positions when price hits this golden ratio on your extensions, and then leave runners for a move higher. But I would never have my full position if I have prices crossing above 161. This is where I would take my majority of the profit. I would say 95% of the position I would take out as soon as 161 is hitting on my fib extensions, which is rare, but whenever it does, that means price in a clear stretch, every single pullback is going to get bought on that. That's a fib extension for the long side, right? And we can now, let's look at some of the short side. Now price is making highs here, price making lows here. Now we have our fib retracement from bottom to the highs, from highs to lows, and then we have our golden pocket out. Price rejected at 15%. This is where you take the trade on the structure change, stop loss at the prior highs. How do you know what your next target is going to be? Is going to be this prior highs, prior lows, and this one as an extension right here. So look where the price struggled. This is where where price bounced right at this golden ratio here at 61 and 78 right here. So these are three main ones: 50, 61, 78. So I would normally take profits. I would say the half position I would out at 61 and 78 are the main ones here. 50, it's all right, but 61 and 78, where I would take most positions out. And then once price crosses 100, I would only have my runners in that position, because now I got which would say A is equal to C move, which is if you are trading this extension, this ABC, that means that move that you measured here, this one, and from the bottom, that means you already got this move from here to the highs, right? You already got this move, so that means I'm not going to be more greedy, because I got the same exact move at 100%, which I bought on that golden ratio on that retracement. And then once I pass 100%, that means I'm only going to be in runners no matter what. Right? So at this point, if I'm runners after 100%, I'm only going to be in the runners if I'm using fib extensions. There's any question this one? This is pretty complicated than the retracements, but definitely you gotta use it every single day or on every chart that you're using. But it's definitely gonna work. Again, guys, these kind of stuff, it's not gonna work on I would say these penny stocks like this one. It's this, I will only use it on the mega caps and then like this one, this is not gonna work on this, or any something like this. It's not gonna, definitely not gonna work in this scenarios, if your charts are looking like this, but it will definitely 100% work on something like Apple, or the blue chip names, where you can find a really nice price action, and we know the big money's trading that, and then 100% will work on those names. Now let's look at Apple, from lows to highs. There's a golden ratio rejection here. That's why I was very bearish on Apple when we got this pullback here on this one, because price was retesting this prior prior breakdown level, retesting it, and with smaller time frame structure changed when this in this candle. I was very bearish. Then I pulled out my fib extension from lows to this highs, and then back up here. Look guys, where price bounced. As price bounced exactly from the golden zone, from 61 to 78. This is where the price bounced to the upside. So now let's say if I'm short again Apple from this prior highs to this prior lows, which is gonna be here, where price rejected exactly at the golden zone. And then if I'm short, then if I'm short this daily time frame, but what is gonna be my target is gonna be, obviously I'm gonna pull out my fibs from this prior highs to this prior lows. I'm gonna pull out my fibs to this prior highs. My next target is gonna be this 168 to 164 on Apple, which is also having a confluence with this daily demand right here, and a gap fill from the prior earnings. That would be a perfect target for any shorts. If you're short, as long as price is staying below this 182, high chances price can test this 168 164 level, and then we can see a bounce like this one from here, and then probably another retracement rejection here until the daily trend changes, right? The same story for the long side. You would say this is only for the short side, but if you pull out from the bottom to the top, and then if you're long, guys, it just guys depends what are you seeing in the smaller time frames, or what your bias is you're trading is. Let's say if you want to go long on this one, but if you look at smaller time frame, price is clearly bearish, because price is making this lower highs and lower lows on a smaller time frame, so there is no reason to go bullish yet. But if let's say tomorrow is price is bouncing off this golden ratio on that retracement, and let's say this 15-minute time frame changes, or the structure changes in 15 minutes, which would be breaking off this prior highs right here, which will be breaking off this prior highs. And at that point I would assume that there are high chances that I would need to pull out my bullish fibs, which would be this prior lows, this prior highs, and then this lows here. And at this point my target would be this box here for the upside, 184 to 186. Again, you can trade any way you want, but you need to look at the current structure here. The current structure is bearish, so that's why I'm looking at more the downside. If that structure is going to change the upside, definitely I'm going to switch my side, and I'm going to play the long side. Makes sense. Question with the fibs: how do we decide to draw from the bottom to up, or from top to bottom? As again, let's say this is price, right? This is a price coming down, and then you want to go short it, and price is in a clear downtrend by looking at something this, looking at here, price in a clear downtrend, price is making lower highs, lower lows. That's a clear downtrend. So that means you don't want to go against the trend in this point, and then you wanna sell the pops, right? That's obvious. And in this point, I would use from top to bottom. I would pull on my fibs, and then as soon as price in this golden ratio, I would decide to go short it, right? But if this is upside, again in this smaller time frame, you can obviously trade the long in a smaller time frame. Right here, if you pull out right here, price bounced off this golden ratio, Now you know in a smaller time frame, price is going up. This is price is making higher highs. Now this trend is changing in a smaller time frame, but the higher time frame trend is still bearish. So, but if you want to play intraday or anything, then I would pull out smaller time frame. In the smaller time frame, the price is bullish, and then in this at this point, I would pull out my retracement and to see whether the price is gonna bounce on this. Because think about this, guys. As long as this trend is holding up, this trend is holding up, and then this is making higher highs and higher lows, bulls will buy. Bulls will buy as long as these lows are holding, or this trend is not changing, and because prices is starting making highs from the lows, broke this prior highs, definitely a new trend is started from the bottom after this huge downtrend, and then I would look to go long on that retracement with the confirmation on a smaller time frame that trend is changing. Prices starting making lower lows, lower highs, coming back into the zone, starting making higher highs, higher lows, breaking this prior highs, confirming that this zone is valid, and then we can go long on this pullback, which is my target is gonna be for this one from lows to this highs, coming back here. Perfect target got hit, 61.78 target hit, and then anything else is just a free money. And then now I'm pulling out my larger time frame fibs, which shows me that price is in a downtrend, and anything comes in that zone can be a bearish sign. And then what happened here, price, as soon as price went into this higher time frame retracement levels, instantly rejected, and then this 30-minute formed a massive rejection candle on some volume 2, and broke the structure. This is where I knew that higher time frames fibs are rejecting. I need to be bearish at this point, and then my target is obviously going to be this prior swing highs, lows here, and this highs. This is my exact target, 61.8. Price came here and then started bouncing, and then went to the 78. I already showed you on this one. So again, guys, you need to look at that trend that you want to look to buy. Let's say if price is going higher highs, higher lows, that means you're gonna buy the pullback. If price is making lower highs and lower lows from the top to the bottom, that means on the pullback you want to look to go short of that of that pullback. Makes sense. Makes sense. Guys, practice. In the end, I'm telling you, only practice is gonna help you. With this to get master into the fibs. It's not easy. I wouldn't say it's easy. It's hard. It took me time to get perfect in this one. Even now I make mistakes here and there, but definitely you need to be get perfect in this. Use it in every time frame, use it in every chart out there, regardless of 5 minute, 15 hourly, daily, have your fibs out. And then once you start notice that price do respect these fibs, just like support and resistance, and supply and demand and all that stuff, these things works too. So once you got a good hang of it, definitely you will get more comfortable drawing it, playing it on the daily basis. Guys, let me know if you guys have any questions. This last time I'm asking before wrapping up today's session. Guys, the fib retracement and the extension, guys, I told you guys is only, this only difference is for fibs, the retracement that you use to enter into the pullback, and then the extensions you measure the target after you enter into a trade. Let's say you entered into a 50 to 60% retracement on that pullback, and then you pull out your extensions to measure the target for your entry. Right? So in this way, if you don't really use extensions, guys, up to you, but the entry is your main point, and the take profit level could be the prior swing highs or the prior swing lows. But if I'm using fib retracement, then I would also use fib extensions just to have my take profit levels visible on my chart, instead of using this prior highs, swing highs and swing lows. Could be, let's say this one. Let's take a look at SPY. look at NVIDIA, by the way. And I was yes, guys, extensions are very useful if there are no prior highs and prior lows. You definitely 100%. Look at NVIDIA, guys. Went into this price was bearish. This in a higher time frame was bearish. 4 hours was making this lower highs and lower lows, and then this and then the overall structure was bearish, and then the retracement was coming. And then it came into the gold zone 61, formed a shooting star into the 15-minute in a 4-hour smaller time frame. This 4-hour rejected, and then today we got the news, and then price dumped a lot from this golden zone. If you took an entry in the golden zone, that's a clear 10% dump, 46 points, in just a couple of days. So guys, these things definitely work. Practice. You're gonna get perfect in this one. Alright guys, so that's a wrap for today's session on Fibonacci retracement and extensions. I hope you guys had much fun and learned as much as I have, because every single time I tell you guys about it could be anything, then I learn as well with you guys. Again, if you guys still have any questions, you guys can DM me or ask in the chat, and then I will catch you guys in the next time.